Welcome back to BrandRepublic.tv. My name is Philip Smith, and for this show we're going to be talking about the one thing that everyone seems to be worrying about: the state of the marketing and the media economy. With the latest bellwether report from the IPA on our desks, now is a good time to take stock of the market. And I'm pleased to say that joining me is Adam Smith, Futures Director at Group N and editor of its authoritative industry forecast this year, next year. Adam, welcome to the BrandRepublic.tv studio. As head of futures at Group M, I hear a lot about the role that you do, but how would you describe your role and your job?
I'm gathering opinions from 60 countries on the media expenditure trends and so on, and also the marketing services side of things. And I look at some countries in some depth, the BRIC markets in particular. I'm basically editing opinions from the coalface.
And that's a role, of course, that must increasingly in the spotlight, particularly in this economic environment. We've heard a lot about Sir Martin Sorrell, who of course is the head of WPP. We've heard a lot about his thoughts on the economy and the fact that 2009 may be the year to worry about. Yet everything I read is doom and gloom about 2008. What do you see as the state of the market at the moment?
In the UK specifically, our own billings are tracking as predicted. We haven't had any sort of sudden reversals, nor do we anticipate any yet. But the market has become more short-term, so clients are looking and reviewing, shorter terms than quarterly. The probability is to the downside, but then that's set against a background of 4 or 5 years of pretty mediocre growth in traditional media anyway, where most, in fact all of the UK growth has been to the internet, which continues to grow very strongly. So I think people are watching and waiting. We may see some revisions in the second half of the year, but there's always a time lag with budget setting, and there's always this question of shifting, of course, between above and below the line, which may occur rather than an absolute withdrawal.
Of course. I wanted to press that point about below the line, because the IPA's bellwether report did say that marketing budgets have just been revised down for the second consecutive quarter, obviously at the beginning of 2008, and that reflects business confidence. For a long time, the bellwether could be parodied as sort of talking about the strengths of digital and direct marketing. I'm going to come on to digital a bit later. Direct marketing, though, that seems to have suffered particularly. Why do you think that is?
It's a combination of capacity and pricing pressures, I think. So if we're talking about direct mail, there's a huge cost advantage to moving that online if you possibly can. It's 10 times cheaper to do it online. So there's a kind of stasis in direct marketing, which is a structural adjustment. Inserts, door to door, these things are already pretty well at full tilt, so they haven't got much room to grow even if they wanted to. And telemarketing has taken a bit of a hit, I mean here and in the US obviously, with privacy related restrictions. So it's a function of both of those things, sort of saturation and the substitution by internet of traditional direct marketing channels.
And of course, financial services companies have been big users of direct marketing. They're clearly in turmoil at the moment. What do you think that's had a big impact?
Not as big as you might think. We've seen at the top end of it, so corporate advice and so on, I think that's come back a bit. But this is the top slice of the financial market. We're talking about sort of plain vanilla stuff, the mortgages, the savings. We're seeing plenty of activity in the financial sector. It's savings focused now, obviously, because that's what they're going for. That's what the market share they'll be going after. But I think it's fair to say there's been they're not selling so many mortgages, as we know.
Of course. Digital is one of the areas that, of course, everyone is talking about, and it's one of the areas that is growing at the moment. Earlier I spoke to John Owen, who is the Planning Director of Dare Digital, and of course the former head of the IPA's Digital Marketing Group. Let's have a look at what John had to say about the digital market.
Well, I think generally we need to be very careful that we don't talk ourselves into a state in which client confidence is low. I think overall marketing spend is still projected to rise upwards in 2008, so that's very, very important. But if there is to be an economic downturn, I wouldn't regard it as good news for anyone. I don't think it's good news for digital agencies or the digital sector. It's potentially less bad news than it is for other sectors, but we'll all suffer if clients lose confidence and reduce spend. I think there's one core challenge that remains and will continue to remain, I suspect, for 2008 and beyond, which is because the marketing landscape is more complex than ever before, because more agencies are at the table than ever before, we have to find better, more efficient, more effective ways of working together collaboratively as agencies to get great output for clients. So that, I believe, is our core challenge. However, I think there is a separate issue to that, which is the issue of accountability, which obviously as budgets get squeezed, accountability becomes ever more important. It's touted as the great advantage, and it is a fantastic advantage that digital has, that it is so accountable. But that's particularly true if you're seeking to sell and create and deliver sales within the online medium. What we have to pay particular attention to is making sure that we are accountable for the influence and measuring the influence that we have in broader, for want of a better term, brand-led campaigns. I think there's an awful lot of work still to do, and I think individual agencies would be wise to invest in that area and to put a lot of thought and concentration into that area. As digital becomes ever more popular with consumers, and as digital work gets heralded for its creative and obviously for its effectiveness achievements, then I think there is more of a shift towards digital or interactive solutions as being the mainstream, the central idea, the ultimate solution to a client brief. And that's not necessarily to say that digital agencies per se are always coming up with those ideas, but I think there is a shift, slowly but surely, towards more digital thinking. I think the fact that at Cannes last year, Nike Plus and their Dove Evolution were probably the two most heralded and talked about pieces of creative work. And I think that has helped in its own way to sort of put digital and interactivity into more of a centre ground, and it's continuing slowly but surely to occupy that space. I think we need to be mindful, perhaps, that if there is to be an economic downturn, that clients may become more conservative. There may be a tendency to say, okay, well, we're not going to take risks, we're not going to try new things, and we're actually going to retrench and use traditional, if you like, channels, the tried and trusted channels. We need to be watchful of that, guard against that if we can. But I think that equally there will be other clients who use the opportunity to actually put more of their spend and more of their attention to digital. So I don't think it'll be an even or uniform picture. I don't think clients will all respond in the same way to the economic conditions. Above all, I think we would advise clients to hold their nerve, to keep their faith in innovation, and to keep their faith in digital, and to keep investing. Because as we know from previous economic downturns, those who continue to invest ultimately succeed.
So Adam, it appears that digital is obviously in good shape. However, in the bellwether, the sharpest cut to marketing budgets was seen in what they call the all other category, and that includes things like market research, sponsorship and PR. Did that come as a surprise to you?
Well, for marketing research, not particularly. Marketing research is coming under extreme pricing pressure in the UK, which is one of the leading markets for market research, because of competition from online, where it's cheaper to collect data and it's easier for new people to set up in the marketing research business. So they have some short-ish terms pricing problems there, while they work out higher value-added services to deliver to clients. PR, it's notoriously volatile. They've only just come back really to the level they were pre-dot-com, so it's been a long road back for PR. And of course they've taken a hit with the financial sector, where M&A activity has fallen off dramatically. Mm-hmm. But they've got some strong positives in PR. The green agenda looks like it's here to stay, corporate social responsibility. And they're involved in the whole area of brand entertainment and sponsorship and so on, which is impinging very much on what we on the agency side regarded as our turf.
Of course. And in terms of sponsorship, it's a big year with the Olympics, and yet recently we've seen torches and displays getting carried through London, getting disrupted. Do Do you think that affects sponsorship budgets in view of the fact that actually people will have made their decisions about the Olympics a long time ago?
That's a fair point. I think the commitments were already made. Obviously, the Beijing, that was fiercely competed for, the Beijing sponsorships. The London Olympic ones are being sold in an orderly fashion in the way that the Olympic Organising Committee wished to do it. They've managed to monetise everything they hoped to do so far. And that's been pretty substantial. So looking at UK sponsorship, the Olympics commitments really dominate that whole area. I think UK sponsorship generally is in pretty good shape. It's inherently stable because sponsorship agreements tend to be fairly long running, and there are only so many properties which are sponsorable. There are only so many big football stadiums or network radio products or TV programmes. So the state of the market is generally healthy.
Okay. So obviously the market overall is incredibly complex. What's your message to advertisers at the moment? What do you think they should be doing?
Well, we are seeing a little bit of weakening in traditional media pricing. There is ample supply, to say the least, of volume press. And we're seeing TV delivering satisfactory audiences. So I think the message to advertisers is, remember that you're in the driving seat in what is perceived to be a softening market. There will be several ways to reach your communications objectives. So extract all the value you can. Lean on your agencies to make sure they're measuring that value properly, because if as the canvas widens to include digital and more direct marketing elements, then make the accountability as business-like as you can as well.
Of course. And if you're one of those agencies that's getting lent on, what's their message? What's the message to agencies?
Diversify, because the only source of growth in most Western markets is effectively digital. So if your agency expects to grow, it's going to have digital competence. That's difficult to find. It's much fought over. So I think agencies have to be... We hear about hub selling, which is something I think the UK does very well. That's media owners selling multiple platform offers. And I think the other side of the coin is hub buying, which is something that the agencies are maybe a little bit slow to organise themselves around, because we've been in the past very functionally segregated, and now the justification for that is eroding.
Right. So it seems to me that obviously there are opportunities there, but also there's room for people to take some action. Thank you, Adam. That, I'm afraid, is all we've got time for. Please do keep an eye out for our next show on BrandRepublic.tv. In that show, we'll be looking at Creative Britain, and we'll be asking what the government is proposing to do for advertising, media and marketing, and really what it should be doing for all of us. Let us know what and who you'd like to see on the show at BrandRepublic.com/on TV. I want to thank Adam, and I do want to thank John for taking part in today's show, and I'd really like to thank our partners at the IPA and of course our sponsors at ThinkBox. And thank you for watching, listening and taking part. See you next time.